Okay, hello and good morning, everyone. Welcome to JFD Traders Espresso with me, Darius and Anucauskas. Today's the 17th of October 2019. So, welcome everyone. Welcome to this Thursday's morning session where we're going to have a quick look at the markets, a few of the charts, some of the charts that we looked at yesterday and, of course, during the week. But before we do that, as always, let's quickly have a read through our risk disclaimers. So, the content we produce does not constitute investment advice or investment recommendation, should not be considered as such, and does not in any way constitute an invitation to acquire any financial instrument or product. As always, a few seconds for you to read the rest, and we can continue. Okay, so also just a quick mentioning of our JFD YouTube channel here, to which you can always subscribe to in order not to miss any of our upcoming videos, and of course our JFD Bank website, but specifically our JFD Research tab here, research page, which you can also check out on a daily basis, and I believe you can find a lot of useful stuff. So, but for now, let's jump into the charts. Now, the first one I want to touch on here is the DAX. So, looking at the German index, and I talked about this one yesterday in my morning video, and basically what I was saying here that we could continue seeing this one traveling higher. There is a good chance for that, and but there are some obstacles to watch on top here, like for example the 12,739 zone, approximately around there, but it failed to reach that area and kind of ended up balancing around its 12,682 area. Now. Of course, yesterday it managed to reach the area around the almost near the 12,700 zone, but as you can see, it it still kind of remained below that. And but looking at the cash index right now, it's currently balancing near its this level right here, and next to the high of July, and that's around the 12,660 approximately around there. So roughly around there, this is where the cash index is balancing right now. In a way, of course, given the sharp, steep uprise that we had already in the past few days, yes, there is a possibility for this one to continue pushing higher. The only thing is that, of course, do not exclude a possible move to the downside. And in a way, if we see this move lower, as long as it stays above this 12,500 territory, we will remain positive in the near term. We will continue aiming to the upside. So in a way, this is the scenario if we start seeing a correction, if we start seeing a drop below the 12,600 zone here. If we do, then yep, consider a possible move towards the 12,500, and if that holds, then this is where it could become a little bit interesting again for the buyers, and we could see them jumping in here and taking advantage of the lower price and pushing the index higher again. So in case this index decides not to retrace first and goes for the highs straight away, of course keep an eye on the yesterday's highs near the 12,700 zone. Near that, slightly above that, we do have the 12,739 area, and let me show you what that level was here in the past. Basically, that's the high of August, of 6th of August of last year. So a nice good pop above it could in a way open the path towards the highest point of July. Of 2018, and that's around the 12,887 zone. So, but again, like I said, this is in the scenario if we get a pop above the yesterday's highs initially, and then we'll start aiming for these levels. For now, given looking at the cash index, as I said, it is currently on the lower side a little bit. So in a way, if it decides to retrace to the downside, then keep your eyes on the 12,500 zone. If it holds, we could see another round of buying. If it starts breaking this area, little area right here, will be somewhat of a neutral one, because for us to start considering lower areas, lower levels, ideally we would like to see a drop below the 12,000, the 388 area right here. So, and then we could aim for slightly lower levels. For now, like I said, that's the game plan. Let's see how this is going to play out. Ripple, I've looked at this one recently, or I should say yesterday, in my trader's Espresso. And basically what I was saying, sorry, it was the trader's tea time that I looked at, and basically what I was saying, that yes, we could continue seeing this one sliding lower, but this is the part where we should be very careful near this upside support line taken from the low of the 24th of September. So as you can see, the crypto managed to drift lower, almost managed to hit that area, but we'll actually count that as a success. And now you can see that the pair is trying to, the crypto is trying to move back up here. Now the only thing is that here at this point it's very tricky, because still we didn't see a nice strong rebound from here. So in a way, we'll start considering slightly higher levels if we see a push above the 0.2873 zone here, right around there, guys. Then yes, we will possibly aim for the psychological 0.30 level. But again, this is the barrier for us to get comfortable with further upside, because a nice good pop above the 0.30 level would confirm a forthcoming higher high, and we could then aim for levels like the 0.3273, which is the highest point of September this year. Now, for those who are more on the cautious side, you probably will do that. You'll probably wait for a break above this level first, just to be on the safe side, because here at this point, yes, even if it travels above the 0.2873 zone around here somewhere, then yeah, you could see if this one drifting a little bit higher, but then it might reverse back to the downside somewhere around here, and then drift lower, and basically this way form a lower high, and then maybe we could end up seeing a break of this upside support line. So in a way, what you could do here is just for now stay safe and stay neutral, continue observing this one, and if we start seeing a break of this upside line and a drop below the low of yesterday near the 0.2792 area, roughly around there, then we will aim for the downside, basically, guys. Of course, short-term downside, but the downside. So for now, keep your eyes on that. And jumping into a few pairs now, AUDCAD. I talked about this one yesterday in my trader's Espresso, and basically what I was saying, that in a way, we may see this one correcting back up here a little bit. We did have a nice correction, and it was this level here, the 0.8923, was holding the rate down, but we did get some nice data from Australia this morning, and so we did get the unemployment figures from Australia, and those came, the unemployment rate came out slightly better than expected, and then the previous, so at 5.2, where the previous was the 5.3. So the market took it as a positive, and we saw the Australian dollar moving sharply to the upside. So this is the reaction that we got. So basically, initially yesterday I was talking about this area holding. If it holds, then we could see another slide lower, but as you can see, the area never held, and we saw a pop to the upside. Now, that said, of course, it's all looking nice and dandy for this pair. The only thing is that for us to get comfortable now with slightly higher levels, ideally we would like to see a push above this barrier right here near the 0.8975 zone. So, and just maybe for that extra confirmation, a push above the 200 EMA on the 4-hour chart here could do the trick for more buyers. So that's why, guys, for now, yes, we had a nice push higher, but just to get get a little bit more comfortable with slightly higher levels, we need to see a push above the 0.8975. In terms of the downside, if this suddenly starts dropping back below the 0.8923 territory, then yep, we will initially aim for the 0.8877 zone, but if that gets broken, then this would confirm a forthcoming lower low, and we could aim for the current lowest point of October. So keep your eyes on this one. GBPNZD. Now, I've talked about this one yesterday in my Traders Tea Time, and this is what I was telling you guys to keep an eye on. So I'll jump into a daily chart, and this is what I was saying. So at the time when we were looking at this one, we were kind of slightly trading above this key barrier at 2.0474 zone. So what I was saying, that if we see a close below this barrier right here, then there is a possibility to see a bit of correction here to the downside. So looking at this, for now, everything's working out nicely. Don't get me wrong, it doesn't mean that this is going to lead to a total reversal here to the downside. It might, of course, but it all going to depend on the Brexit negotiations and of course how the Brexit plan is going to get will it get approved in the parliament. So that's why, guys, be very careful here at this stage. Yes, we've managed to find good resistance here below the highest point of October 2018. We did overshoot it yesterday, but as you can see, we stayed below it, so we closed below it on the daily chart, and now we're drifting a little bit to the downside. So of course this is all, like I said, working out nicely as planned. If you would like to find out where we could see maybe a possible correction here, we could draw a nice Fibonacci retracement and to see where approximately this could drift to. So currently, as you can see, the pair has already tested its 23.6% retracement on the Fibonacci, so that's wonderful. The only thing is that this depends, because if the pair still wants to go higher, and if the pound is still seeing some buying interest, and we'll see some positive headlines, now this could be your reversal area, and then we could see another push higher. So for now, be very careful. If we see a drop below this little area here, below the 23.6% retracement on the Fibonacci, then we will consider a possible slide lower. We'll aim for the 38.2%, and that's roughly around the 2.0077 territory. So a good potential area. We're going to keep it short and simple. We're not going to overdo this. If we see a drop below the 23.6, and that's roughly around the 2.0260 territory, 59.60, something like that, then we will consider a further slide lower. We're going to be very careful here. We're not going to attack even the 50% or even the 64.8. No, because we're going to keep it short and simple, because in case this the good news are still coming out of the whole Brexit negotiations, then yep, we could see another round of buying here. We could even see the same thing from here, from the 23.6%, but for now I think the pair is kind of going for a bit of correction. Everybody's going for a bit of profit taking here, and we could see maybe this one sliding a little bit lower. But again, be very careful around here. Be careful around this area. And but there is a possibility for this one to drift towards the 2.0077 territory, approximately around there. So keep your eyes on this one. If in case, let's say, as I said, it reverses earlier from this 23.6% retracement on the Fibonacci, then keep an eye on this level here, the 2.0474 zone. I talked about this one yesterday. That's, like I said, that's the highest point of October 2018. If it struggles to get above it, now this is where it could become a little bit more interesting for the sellers, because if the pair struggles to push above this 2.0474 zone, we could see another round of selling potentially, and then yep, we could maybe see this one drifting back down, further down, maybe even going towards the psychological 2 zone. or even below that. But again, for now we are already in the correction mode. Let's see how much more it could correct. In case this decides to ignore the pivot, keep an eye on this level as well, the 2.02 area, roughly around there, because that's around the S1, today's S1, and not far from the 21 EMA on the 4-hour chart. Good potential area, good potential target as well. But like I said, in case it decides to ignore the Fibonacci. So for now, I do understand that there's a lot to keep an eye on, but we'd rather be safe than sorry. But for now, like I said, guys, it's very interesting here. If it gets a push above the 2.0474, then we will aim for the yesterday's high, and that's roughly around the 2.0560 territory, and a nice good push above it would confirm a forthcoming higher high, and we could target the area around the R2, which is around the 2.0745 zone. So roughly around there, guys, could be a nice potential target. And the yesterday's high is near its R1, today's R1. So keep your eyes on this one. GBPUSD also having a bit of a retracement. So this is what I talked about yesterday as well. This is what we're seeing right now. We are seeing this correction, but be very careful near the 1.2707 zone, roughly around there, because if it holds, that's basically the high of the 11th of October, the high of last week. If it holds, we could see another round of buying. The bulls could take advantage of the lower rate, and we could see this one pushing to the upside. But if it starts drifting below the 1.25 zone here, the 1.2650 zone, then yep, we will aim for the 1.25 area, and this could be a nice move for the sellers. So for now, keep your eyes on these two levels. As I said, the one still for us to consider possible move higher, we need to see a nice rebound from the 1.2707. But if it starts drifting below that, a drop below the 1.2650 could in a way do the trick for more sellers. And the last pair for this session is going to be euro dollar. Yesterday it moved higher. It finally moved above the 1.1063 area that I was talking about. It drifted higher. It broke above the 1.1075 zone as well, and managed to reach a new area, interesting level here. And let me just put this one on the chart, and that's roughly around the 1.1085 zone. So so it reached that area, found good resistance there, and now it's drifting to the downside. As long as this stays above this 1.1063 or even the 60 zone, we will continue aiming to the upside. We will, well, or should I say, the upside will get limited near the 1.1110 zone. So that's our initial target. I keep talking about this level for quite a while now, and that's going to be our main target if it pushes to the upside again. If this area starts getting broken, if this area starts breaking, then the 1.1063 area, then yep, it could lead towards a bit of a decline here, a bit of a correction. The reason why we're going to call it is still a correction because we continue to trade above this short-term upside support line taken from the low of the 1st of October. So as long as it also stays above here, there is still a good chance for this one to reverse and push to the upside then. So in a way, if we see a drop below the 1.1063 from the short-term perspective, yes, we could see a larger correction here, a move lower, and but still overall we're gonna remain somewhat positive as long as it stays above this upside support line. If it starts breaking and the rate starts falling below this little area right here around the 1.1020 21, then we will aim for a possible test of this medium-term downside resistance line and a test of it from above, and also we could see a test of this area near the 1.0966. So keep your eyes on that one, guys. Okay, I really hope you found it useful. Thank you very much for sticking around and watching it till the end. If you want to join me later on at my trader's tea time, as always, guys, that's 13:15 GMT. Keep an eye on today's calendar. We do have some interesting data coming out from the UK today, so we do have their retail sales figures coming out. And yep, that could affect the pound a little bit. So, but not much. Of course, the main topic still remains Brexit and its deal and how they're gonna go forward. But yeah, like I said, guys, still yep, keep an eye on that data release. We may see a bit of a maybe a small move in the, or I wouldn't even say a small move, but just a move. We could see a bit of volatility, let's say, on GBP pairs. But then I said, like I said, be very careful because the main subject still remains Brexit. Okay, guys, thank you very much for sticking around and watching till the end, and I'll see you later. Bye bye.